You're thinking about buying a home in 2025, and you're asking the big question, can I even qualify for a mortgage right now? You're not alone. Between high rates, changing guidelines, and confusing headlines, a lot of people are wondering the same thing. That's exactly why I made this video. Hi, I'm Mike Romano, Regional Manager and Loan Officer with Cornerstone First Mortgage. I've been helping people buy and refinance homes for over 27 years. And I can tell you, qualifying in today's market is absolutely possible if you know what lenders are really looking for. So, let's walk through exactly how to get mortgage ready in 2025. No fluff, just clear steps and real talk. When you apply for a mortgage, we look at what's called the 4Cs: credit, your credit score and payment history; capacity, your income versus your monthly debts; capital, how much money you've saved or invested; and collateral, the home you're buying. Every loan decision is built on those four pillars. If three are strong and one is weak, we might still find a path. But if multiple areas need help, we'll come up with a plan to get you there. We'll unpack each one of these and show you exactly what lenders want to see in 2025. Let's start with credit, because that's one of the biggest questions I get. How good does my credit need to be? Here's the breakdown. FHA loans allow credit scores as low as 580 with 3.5% down. VA and USDA don't set a minimum, but lenders usually want 600 to 620. Conventional loans require 620 minimum, but better pricing starts around 680, and the best terms come in at 740 plus. But here's what's new this year. Vantage Score 4.0 is starting to show up in more underwriting systems. This new credit model considers things like rent payments, utility bills, even some subscription services. If you've been responsible with money, but don't have a lot of traditional credit, this could help your score. Most lenders are not using it yet, but it'll start getting traction, especially for first-time home buyers or younger borrowers. Now, let's talk about income, because it's not just how much you make, it's how consistent and verifiable it is. You'll need to show 2 years of stable income in most cases. This could be W-2 employee income, 1099 income for contractors, or self-employment income backed by tax returns. Lenders want to see that your income is likely to continue. We'll also look at your debt-to-income ratio, or DTI. That's the percentage of your income that goes towards debts. Example, let's say you make $6,000 a month, and your car, credit cards, and future mortgage total $2,400. That's a 40% DTI. Most loans allow up to a 43% DTI for conventional and up to 50% for FHA and VA. Pro tip: lower DTI equals better chance of approval and better pricing. It shows you're not overextended. Let's talk money. How much do you need to buy a home in 2025? The down payment depends on the loan type. FHA, 3.5%. Conventional, 3% for first-time homebuyers. VA and USDA, 0% down. But don't forget closing costs, usually between 2 and 5% of the purchase price. Those can be covered with seller credits, grants, or lender help. Now, here's something most people overlook: reserves. Reserves are your leftover savings after closing. Think 2 to 6 months worth of mortgage payments sitting in the bank. The more reserves you have, the stronger your loan file looks to underwriting. And here's the wild card in 2025. Some lenders now allow crypto held on U.S. exchanges to count towards the reserves. It's case by case, but it's happening. So, what's different this year? Here are the big shifts that affect qualification. Crypto and digital assets may count as reserves if properly documented. Vantage Score 4.0 will help more buyers qualify with alternative data. Rental history reporting is a major boost, so if your landlord offers it, opt in. Automated underwriting systems are tightening up, especially on the high DTI loans. That's why pre-approval from a real human expert matters more than ever. Online apps can't explain why your file got flagged, but I can. So here's the bottom line. You don't need perfect credit. You don't need to make six figures. You don't need 20% down. But you do need a plan. The sooner we look at your numbers, the sooner we can get you home ready, even if that takes a few months. If you're serious about buying in the next year, click the link below to book a 10-minute strategy call with me. And make sure to watch the next video in the series. What credit score do you need to buy a home in 2025? I break it down how scoring works, what's changed, and how to boost your numbers fast. Subscribe, like, and let's move you closer to home ownership.